Most people think this job is just about math. They think it's spreadsheets, calculators, and telling people no when they want to spend money. But if that's all I did, a computer could replace me tomorrow. When you are the chief financial officer of a Fortune 500 company, you aren't just counting the beans. You are predicting the future. You are the architect of the company's survival, and you are the one person who goes to jail if the numbers aren't right. My day doesn't start with the sun. It starts with the markets. The alarm goes off at 4:30 a.m. By the time I wake up in New York, the London Exchange is halfway through its day and Tokyo is just closing. Money never sleeps, and neither does the responsibility of managing $50 billion in assets. While I'm making that first espresso, I'm not checking Instagram. I'm checking Bloomberg. I'm looking at currency fluctuations. Did the euro drop overnight? Did the cost of raw materials spike because of a strike in South America? Before I've even brushed my teeth, I need to know if we just lost $5 million while I was sleeping. By 5:45 a.m., I'm in the car. The commute isn't downtime, it's triage. I have a dashboard on my tablet that shows me the global pulse of our company. Cash flow, daily sales from the APAC region, inventory levels in Europe. I'm looking for red flags. If there's a problem, I need to have a solution ready before I walk through the office doors. The CEO doesn't pay me to report problems. She pays me to fix them before Wall Street finds out they exist. I walk into the building at 6:45 a.m. The lobby is quiet, but my mind is already racing at 100 miles an hour. The first hour is the only quiet time I'll get. This is when I do the deep thinking. I look at our capital allocation. We have $3 billion in cash sitting in our accounts. What do we do with it? Do we buy back our own stock to boost the share price? Do we pay a dividend to keep our investors happy? Or do we hoard it because the economy looks shaky and we might need a safety net next year? These aren't just numbers. These are decisions that impact 50,000 employees. At 8 a.m., the meetings start, and they don't stop until sunset. The first one is the most important. The CEO one-on-one. There's a misconception that the CEO is the dreamer and the CFO is the brake pedal. That's the old way. In a modern Fortune 500, I am the strategic partner. The CEO sees the vision, the new technology, the market dominance. My job is to see the trap. Is the company actually worth that much? Is their debt toxic? If we buy them, will it destroy our credit rating? I have to look my boss in the eye and say, I know you want this, but the numbers say it's a suicide mission. Or I have to say, let's find the money and make it happen. By 10 a.m., I'm in the war room with my FP&A team, financial planning and analysis. This is the engine room. We have an earnings call coming up in 3 weeks. For a public company, the earnings call is report card day, judgment day, and the Super Bowl all rolled into one. We are scrubbing the projections. Every single decimal point matters. If we tell Wall Street we're going to make $1.50 per share, and we come in at $1.49, our stock could drop 10% in seconds. That wipes out billions in value. Pension funds lose money. People's 401ks take a hit. The pressure in this room is suffocating. I spot a variance in the marketing budget. They're spending too fast. I have to make the hard call immediately. I tell the team to freeze travel budgets for the rest of the quarter. It's not popular. People will hate me for it. But my loyalty isn't to their business class flights, it's to the solvency of the company. Today, I'm at a steakhouse midtown. Not because I'm hungry, but because I need to keep the banks happy. I'm meeting with 2 senior partners from our lead investment bank. We carry debt, billions of it. With interest rates rising, that debt is getting more expensive to service. I need to renegotiate our terms. I have to project absolute confidence. I have to sell them the story of our growth while acknowledging the headwinds. I spend 90 minutes eating food I barely taste and carefully choosing every single word. By the time the check comes, I've saved the company $4 million in interest payments for next year. That's a good lunch. This is where the job becomes less about math and more about risk management when we have a compliance issue. A fine costs money, yes, but the reputational damage costs more. If we lose the trust of the public, our sales tank. I have to assess the financial impact of the worst-case scenario. Do we need to set aside reserves? Do we need to issue a press release? I have to weigh the legal advice against the financial reality. 3 p.m. is investor relations. I spend an hour on the phone with our biggest shareholders, institutional investors who hold hundreds of millions of dollars of our stock. They are smart, aggressive, and they ask tough questions. Why are margins compressing in the North American sector? Why is R&D spending up but patent output down? I am the face of the company's financial health. I have to explain that the drop in margins today is because we are building a factory that will double our capacity tomorrow. If they sell, the stock crashes, and the board of directors starts looking for a new CFO. Around 4:30 p.m., the pace changes. I meet with the controller and the audit team. This is the unsexy, gritty work. Internal controls, making sure nobody is stealing from us, making sure the tax strategy is sound. We operate in 40 countries, which means 40 different tax codes. It's a puzzle with a million pieces. We are looking at efficient ways to move cash from our European entities back to the US. It's technical, it's dry, and it is absolutely vital. One mistake here means an investigation by the SEC, and on my watch, that is not an option. 6 p.m. Most of the office has gone home. The sun is setting, but I'm just starting my second shift. This is when I catch up on emails. I have about 200 unread messages. I approve expenses, I review resumes for a new VP of Finance, and I finally get a chance to look at the daily close numbers. Being a CFO is a lonely job. You know things others don't. You know about layoffs before they happen. You know about acquisitions before they are announced. You carry the weight of the company's secrets. You have to be the adult in the room, constantly balancing ambition with caution. It's a burden, but it's also a privilege. I leave the office around 7:30 or 8 p.m. The car ride home is quiet. I might make a call to our team in Asia as their day is just starting. The cycle continues. When I get home, I try to disconnect, but it's hard. The markets are open in Asia. The numbers are moving on the screen. I have a quick dinner, maybe see my family for an hour, but my phone is always within reach. Before I close my eyes, I check the futures market one last time. Is the S&P 500 up or down? What is oil trading at? I set the alarm for 4:30 a.m. again. That is the life of a Fortune 500 CFO, and I wouldn't trade it for anything.